Hello and welcome to Apex Trades. Attention all crypto traders, the world of Bitcoin is about to get intense. We're entering a crucial area of the charts. This move to the upside has given off strong bullish signals, but don't get too excited just yet. Stay tuned as we deep dive into why this could go either way, and having a keen eye for market reaction is the key to success in this high stakes game we call trading. Let's get at it. Okay, so what you are about to see, if we take a look at TradingView, right now it looks like BTC is on another move to the upside. Now look, we can take this area here. We have a parallel channel which we've broken out of. We're going to cover that in just a short second. I just wanted to cover something else, right? So if we take, we're on the 12-hour chart. If we take this move, let's go back here, and we go to, no, we're not in a long position. We want the Fibonacci extension tool. We go from the low to the high, back down to the low, right down where that low is, and we can see some crucial key levels being built, right? We're going to talk about liquidity zones in just a second. We must be very, very careful in anticipating one way or the other, and it's going to be key. And actually, the most successful traders can understand what happens around reaction. So how does a price approaching a certain area react? Do bigger players step in, absorb that, and then return to the downside, or do we break through and have a successful breakout rather than a fake out? And these are key things that you need to be able to master and understand if you've got any chance of being a successful trader, because a lot of people will just blindly go in without looking at what's going on in the engine room. So we're going to cover that. So we can see here right now we are already at we've passed a crucial level. We have this 1.236 zone right at that 24,860. That would be a key area in terms of being able to get past it. But also, look, you know, this is right just underneath where we have our liquidity here. Why do we say that this is liquidity, by the way? Two reasons why these are liquidity. Mainly, the thing is right above this area. You can imagine anyone who's going short at these areas, let's just say, if you've shorted here, you may have a very, very tight stop loss. So right above these areas here, there's everybody's stop losses, and that's liquidity, right? That's where people will know that people are going to exchange them stop losses for getting out of the market, exchange it from buys to sells. So always good to mark out where your liquidity zones are. That's why we've got a liquidity zone here, and we also have a liquidity zone here. But not forgetting, obviously, these key levels on the chart, which you've got right at this 1.236. That's just at 24,844, and then the next zone above that. So let's say we do break this zone, the next anticipated area I would look for is that 25,942. So liquidity zone at 25,200. Next zone of interest above that would be this area, and also this is also a fair value gap. I won't draw it out, but you can see to the naked eye that there's going to be a fair value gap here. And then of course we have the golden pocket at that 1.65 there, 1.618 to 1.65. What I want to do though, however, is just zoom into the this kind of area here, right? So we're going to go on to the 15-minute. I may decide to take this off in a short while. Let me just bring this in. Let's bring in, actually let's take off the fib so we don't convolute things, and let's go into our parallel channel. So it looks like Bitcoin continued to drive up, and as you can see, we have broken out of this. We also had a symmetrical triangle that was building up, which again you can see we'd broken out of that. But like I said on the introduction, it's dangerous to get too bullish just at this time. However, bullish structure is certainly starting to form even on the shorter time frame. So let's have a look at why that's the case. Right now, as you can see over on Trading Light, we have a couple of interesting things that form. Now I always say one thing you want to see is that all of the interesting ideas are coming together at the same time. So that's CVD, yeah, so buy pressure. Open interest means new money is coming into the exchange. and you're also seeing price action also doing the same activity. That signifies that there is bullish motion. For example, if we started to see open interest in waning, i.e. money coming out of the market, and the price was still moving up, or CVD divergence going the opposite way, then you've got a divergence. You've got something that's counter to the idea that the market's moving up. If money's leaving the market, then that price action for me wouldn't stay there too long, because at some point that means players are starting to absorb the idea of this move, and then it will spin to the downside. We see this quite easily actually. If you take this move that's been very bullish on the price, and you can see open interest coming into the market, very easy to see on the eye. You don't need your magnifying glass to spot that. And then the buying pressure. So new money coming into the market, buying pressure starting to increase, price action also really starting to increase. Some things that we just need to be mindful of though, and this is why it's really important to not get too drawn in at this stage. So this is, if you're familiar with Bookmap as an example, Bookmap is a tool that is very much around. Let me just bring this up so you can see what I'm talking about. It's already on the screen. I just need to have it on mine. You can see Bookmap here is very much a tool that you can identify where these high zones of liquidity are. I'm not going to use Bookmap just right now. I just want to bring it more. I just want to kind of focus in on the idea of Bookmap, and what it is all about demonstrating and showing data on. Let me just make sure I've got the right screen on for you guys, just in case it's not on properly. Let me just change this to Bookmap. That's better. Yeah, so Bookmap, you can see the areas of liquidity. So where is on this on the exchange? This is Binance's exchange. Where's the big orders being placed? You can see we've got a lot of orders at the 23,800, and we've got a lot of orders at the 1500 BTC at 23,900. So going back to trading light, as I say, the key thing to be mindful of, and why to not get too bullish at this stage, is what we could absolutely see is we could come and claim this liquidity. You can see as we zoom in here, we only have like 850 BTC. You multiply that by the price of 23,800, it's still a significant amount of money to be traded. So whether we come up and claim this liquidity probably looks very likely, just because of the structure. However, up at this 23,900 is a really strong level. We've got 1.5k BTC to be traded at this area. So these are all sells, obviously. So these are where people will be trying to sell at this market price. So what am I going to be looking for? Number one, I'm going to be looking for open interest. So when we hit this level, what happens? Does interest start to drop off, i.e. long liquidations, people taking profits? Pick whatever one you want, but ultimately it's money leaving that exchange. Does the bullish pressure maintain, but the price does not go up? So once we hit this zone, even if the CVD divergence, i.e. the buying pressure continues, but the bigger players are absorbing that pressure, then that would be a really strong intent that price is going to come back down. So this is why I'm saying reaction to the market is the most key fundamental skill to understand, specifically if you're a day trader, but specifically if you're looking for scalping and getting in and out. Understanding that reaction is key. It's not just about, I'm going to put buy BTC at this level because it's a key level. It's how does the market react when the key level is hit? Do we start to see more money coming in and more bullish confirmation on your buying pressure? Usually what you want to see then is continuation to the upside. So how are we going to trade this plan? Well, if I just head back to, let's see, I'm going to go back to trading view real quick. Let me just get that back up on the screen for you guys. The way I would trade this is I would be looking specifically at those key levels. So where was the first level? The first level was at 23,800, right? So it's here, 23,800. Do we have any volume zones here? We've got a volume zone right around this area, of course we have, that's anticipated. Also at that liquidity level. So this is going to be a key level irrespective of how we drive. But we've got the bottom of my zone here right at that 23,800. So this is the first point that I'm going to look for a reaction. So I would say like this, you'd have a short position or a sell position somewhere around this area, right? And a stop loss just above that 29. because 29 is the next area of liquidity. So maybe you're going to go like 29.50 or 23,950. Nice short stop loss. Where would we anticipate the move coming back into? Right back in the zone. The only thing that we've got to be mindful of is if we do see that we do break the zone, what CVD is essentially market orders. So going back to trading light, we've got to be careful, because what you don't want to just see is, yes, we may break through this 23,800 and then we come up to the 23,900 and then we just break through it a little bit, and then really aggressive sellers come into the market and really push that price back down. So I would say like this again, just being mindful of the fact that if you have a really tight stop loss, just going back over to TradingView real quick, if you have a really tight stop loss, the thing you've got to be mindful of is you could quite easily still get stopped out without being able to register this move. So I would probably, because of the risk to reward ratio, remember we only have to really want to get back into this channel. Why is it important to think about it like this as well? Within the weekend, volume you anticipate should really be low. However, we've got the big FOMC meeting on the 1st of February, so it's thinking logically, it's highly unlikely that we'd expect to see any kind of crazy move right now before the FOMC. Yes, we may be pricing these things in. Yes, data may have slipped, but we have to just trade based on what we think. So I'd give my stop loss a little bit of room to grow, because I don't want to be stopped out too early. However, somewhere around here would be a really good idea. And then back into the mean, even if you go here, that's a nice 3.1 risk to reward ratio here. If we come back into that traded channel. Now, in terms of a move to the downside, if we do come in, and then obviously we have the FOMC data, I'm just going to remove my zone so we don't make the chart too messy. Again, you're looking at simple idea of where we can retrace back to is taking the low here, come to the high, and you're aiming for 0.5 or the golden pocket. Now the golden pocket, like I say, is nicely in this area here where you've got a lot of this previous resistance, which would now act as support. So taking that into account, this whole area here is a nice strike rate for where I can expect price to move back to. So I'd be targeting, if I did get a short or a sell position somewhere around here, you can take a day trade down to this zone here, or you could hold it for longer, and you'd be anticipating here. What happens if we continue the breakout and actually we continue up? Well, like I say, you may have a buy position. I would not look, if for me, I would not be looking to buy at this zone. I really wouldn't. I would only look to put a buy zone in is if we come back down, let's say for the retest. Yeah, so you want to see, let me bring the fib extension back in. You want to see us come back in and retest this zone, whether it's a high here, around this area, or whether we come retest at the Monday high or somewhere in this area. Or actually, if we do break the previous week high, I would want us to come back in, test this area, and then I'd be wanting to see an upside move. Just the problem we've got right now is we've got, let me just move to a higher time frame. We've got these liquidity zones which, even if we want to confirm a move to the downside, highly likely that we could come and claim liquidity and move back down. If we go to the 4-hour chart, as I say, we have got areas of liquidity just at this point here. So, you want to see a reaction to the downside, but then quite happily see a move to the upside if that's confirmed. Again, it's whether the market's priced in the idea of what basis points the Fed are going to go with. But we're in this kind of idea where everything is very bullish, irrespective of we are starting to see a reduction in inflation. The numbers are starting to come down, but the problem is the moment we start to ease off, how fast of a reaction will we get back to inflation? And you can look back at, well, I think it was like 1970s when the Fed made the same mistakes, and I think you've heard Jerome Powell actually say on a lot of his statements that they don't want to make the same mistakes as they did last time, which is to say they ease off and then inflation just jumps right back up again, you know, and then they have to really go crazy again with restrictions in place, and you end up with this kind of wigwam effect of the over a longer period of time, years, like a horrible recession period where it's just the state of affairs aren't great. So I think if you look at why the Fed are maintaining this really hawkish stance on we will not reduce rates, well, it's just going to be tough for the average person to keep money, you know, and I just don't know how that is going to affect the market over a longer period of time. I feel like we're in this kind of state where everyone's going crazy because the rates are still, because the we're lowering the interest rates. It's still not great. It's still not good. We are seeing a lot of layoffs happening now. All the tech sector, all these big layoffs, stuff like that. We've seen a few little artificial pumps because of things like Tesla and whatnot. So it's difficult for me to get bullish. I know, but I feel like a broken record saying this. So I'm trying to just maintain trading level to level, not being too focused on a much more macro outlook, but just level to level. So as I say, I'm still maintaining right now that I'm bearish in this move, and I'm looking for that order, like I said, just in terms of a short, somewhere around the where would I want to look at my short again? It's that 23,800, just because that's where the liquidity is, maybe just slightly less, and give myself enough room for a stop. But there's two zones I would look to take profit. My first zone would be just here, just as a nice risk to reward ratio of about 2 to 1, 2 or 3 to 1, and then my second zone is going to be down here, right at that kind of golden pocket zone what we covered before. So hopefully you guys trade well. The reaction is just as important. If you don't have trading light, I mean, I think it's like $20 a month, but for me it's a mishmash of having a platform to trade on in the sense of charting, because you can see the price action, but it also gives you the nice liquidity zones to see where the liquidity lies, and also you can see really key information like open interest and CVD, so buying pressure and money leaving or entering the exchange. Really good signals to get your head into, to understanding how these markets move. So any questions, leave feedback in the comment section. More than happy to kind of come over and have a chat. Also, Discord link is in the server if you want to trade with us. There's also a ByBit link if you want to use my referral codes. You will get $50. Fantastic, helps you, helps me, helps the channel, all that kind of nonsense. But feel free to use that or don't. And I think with that one we'll leave it there. So just be careful of anything too soon. Let's just see how we react when we hit this zone. I will be looking for a short entry, nice relatively tight stop loss, and then kind of that's where we go from there. Again, if we do come down, just lastly, I think I want to cover this from where I would be looking to long from, is if I head back into TradingView, I'm only going to be looking for the longs, because right now it's not valuable. I don't think there's value in getting a long at this stage. Where I would be looking for the long is around the 19k. Now that's like, really, you think it's going to come down that much? Well, it's where my value is for a retracement, right? So you want to see if this for me is confirmation of a bullish move to the upside. I want to see a retracement, and then a further move to the upside would give me better indication that this is a strong move. If we just keep on kind of hitting these zones slowly without any decent retracement, I just think the wheels will fall off at some point, because things just can't go up forever. It's like the inverse of what we've seen here, right? It's the inverse. Everyone's going crazy at this up level, and it's like, oh, okay, price is going to come back up soon. Okay, price is going to come back up soon. Now price is going to come back up, but even that was not a significant retracement. I suppose what you could argue is when this came down to this point, we had at least a 0.5, just to kind of run that idea somewhere around there. Yeah, well, actually, we came back to the golden pocket. Now, you can't say that about anything here, which is why I am more concerned. If you take this move, let me just clean this chart up a little quick minute. Get rid of that. Get rid of that. Get rid of that. Get rid of that. Let's just you can see. I mean, look. Where's the retracement from this move? It's just. It's the one defining thing that's concerning me. Even in that crazy, move down and stuff like that, we had a retracement. We've seen nothing, and that's the concern. So, like I say, for me to get bullish, I would like to see that structure really occur. So, we come up, come down, somewhere here, give me something to get excited about, and then it's like, okay, now we can go to the upside and move forward. Until that happens, it's difficult to get that case. However, there are an awful lot of interesting sentiments that suggest the bottom is in. The other thing you've got to be mindful of right now is the greed and fear index is really starting to get overly bullish as well, and we know how market makers like to play that game when things get a bit too crazy. So, as I say, just to finish off, keep your eyes peeled. Let's wait for the reaction at these specific zones. Let's see how they react. Obviously, I've got a nice short in, waiting for that to be filled at the 23,800, and then just having a stop just above them kind of liquidity zones. So, that being said, hope you've enjoyed this one, and I shall see you guys in the next one. I guess, yeah, bye for now. Thank you very much. Speak to you soon.